I'm Tiffany Johannes with Remax Executive and Charlotte Home Experts, and I am here for our first-time homebuyer workshop tonight. Before we get started, I'm also going to do a market update to tell you what's been going on in the market in November. I've got a special guest here with me, Michelle Dubois with Prime Lending. Welcome, Michelle.
Thank you so much, Tiffany.
Welcome. We're going to go ahead and get started. Thank you guys for joining us tonight. Have you been wondering what's going on in the market? Most clients I talk to and most people I talk to say, are you slowing down? Are you ready for the holidays? And I say, you know what? I listed 4 houses in the last 5 days and 3 of them are under contract with multiple offers. It's crazy busy right now. And just to give you an idea, our average sales price in November, year over year, compared to 2019 is up 14.2%. That's incredible. Our inventory, though, is down 52%. That is an amazing amount of homes less compared to last year. We have 4,036 new listings. Our closed sales has been about 4,243 sales. Our days on the market, 24 days. That's from the time you go on the market till the time you go under contract on average. Then the month's supply of inventory, that means all the homes on the market, all the buyers in the market would be gone in 30 days if we didn't keep adding new inventory. An even buyer seller's market is typically 6 months. But right now, we have an even more competitive market because we've got incredible interest rates for our buyers. Michelle is a lender with Prime Lending, and she is going to talk to us a little bit about interest rates and what's going on in the market. But I just wanted to give you a quick snapshot of buyers are still out there, sellers are still out there, and we've got incredible interest rates. So if you're looking to buy or sell, now's your time. If you're a first-time home buyer, there's some steps and guidance that experts can help you with. Michelle's an expert. She has been a lender for over 20 years, and I've been in real estate for about 15 years. And as we look and see what's happening out there, we really want to help guide first-time home buyers and help them understand how to get into home ownership. And we want to talk to you a little bit about why it's important long-term and terms and things that you need to think about if you're thinking about buying a home now, 6 months, a year from now, or 3 years, because there's a strategy that you can use that will be very helpful. So let's go ahead and get started with our talk about interest rates. When we look at interest rates right now, we are so much better off than we were in 2019, and 2020 is doing well, but 2021 is probably still going to have some low interest rates for a good while. We're going to probably have one of the best markets we've had in a long time in the spring as we approach that. And as you're thinking about interest rates, the lower the interest rate, the more home you can afford, the lower payment on a home that you like. There's so many reasons to consider getting in the market today. Buyer traffic across the country is pretty strong. If you look at this map, North Carolina and South Carolina are strong to very strong. So when you get out there, you're going to have some competition. And that's one of the reasons why Michelle and I decided to do this home buyer workshop tonight for first-time home buyers. We wanted to educate you and get you really going on what you need to know and how you can help us strategize and get you the best house with the least inconvenience to you and understand what you're getting into. So welcome to the first-time buyer workshop. Oftentimes, I hear people saying, should I buy or should I rent? Well, when we talk about buying or renting, if you choose to buy, or if you did in 2013, your median family net worth would have increased by 15% to date.
That's incredible.
If you were renting, it decreased by 9% since 2013. And that's from the National Association of Realtors Statistics and Information. We have an incredible amount of resources and information. And this stat is huge when you think about it. Michelle and I were talking yesterday, and by the time someone is 30, they've often spent $100,000 paying their landlord. Michelle, can you believe that?
No, it's crazy. And what I'm experiencing right now is I work with a lot of first-time home buyers, and with these, incredibly low interest rates, many of them are able to buy a home and their monthly payment is less. buying than renting. And then they have all the advantages that buying offers versus renting.
You are definitely right. And when you look at household wealth across our country, 90% of it is due to home equity and that growth. And when you think about our home prices going up 14% in our metro area year over year, that's how equity is built. Looking at stats, 74% of our millennials are interested in purchasing a home in the next 12 months. The majority of them, it's going to be their first home. And so let's help educate, whether you're here learning for your child or you are someone who's looking to be that first-time home buyer. Let's hear what Michelle has to say. There's a lot of information out there when we look at it. From a long-term investment standpoint, real estate, from a Gallup poll perspective, for the last 7 years, has been the #1 investment. So let's figure out how we can get you into the real estate market.
Okay.
Michelle, what numbers matter? That's the biggest thing. You're the numbers person.
Yes.
Okay.
So right off the bat, the mortgage interest rate, like we just talked about, that makes a real big difference on the buying power that first-time home buyer would have. They'd be able to buy, a whole lot more house for less money than renting.
They definitely can. And when you look at the interest rates where they were at 3.97%, and now they're at anywhere from 2.71, depending on the day, up to 3%, that buying power shifts.
Absolutely. Couldn't agree more. It makes a big difference. Yeah.
And so credit scores. With the credit score, we have to look at a lot of different things. So I think one of the biggest myths out there is you need a 750, 800 credit score. Looking at the numbers here, Michelle, almost 46% of the population that got a mortgage got it at under 750.
Absolutely. And I think people are afraid of credit. It's like that unknown thing, and worried, is my credit score high enough, because they've heard from other people, their parents, whatever, that, you have to have a 740 or higher credit score. And that's just simply not true. On first-time home buyers loan programs, and anyone, I mean, there's programs where the credit score can be as low as 640, and getting the best interest rates there on that particular loan program to 680, and having no credit score at all. I mean, that's something that I think a lot of people think that they can't buy because they haven't established credit, and that's just simply not true. We can do loans even if there is no credit.
23% of the buyers, 23% of the buyers were able to buy with a credit score of under 700, and 6% under 650.
Yeah.
So if you have a credit score and you're keeping track of it, start talking with Michelle now about what your credit score looks like and how to approach things. When we start looking at how it breaks down, the averages are there. FHA and VA, we'll talk about what that is in a minute, have a little bit lower credit scores than the conventional, but regardless of your credit score, there's a way for you to buy a home or to strategize on how to buy a home.
Yes.
So tell us a little bit about how that credit score comes together, and then we'll talk a little bit about what you can do to make sure you can lift your credit score, keep it where it is if you want to.
Okay, so the credit score is based on how much credit that you have, and how you pay monthly. So, good credit management. It is also based on utilization of, if you have credit cards, the length of the history of the credit, and and it obviously paying your bills on time. That's really important. So all those things go into a factor of making that credit score.
So what improves the credit score? I know we have a lot of people that come to us and realize their credit score is not where they want it to be. And one thing I always tell them is talk to Michelle, talk to a lender, because what you think is going to drive your credit score up might not be the case, because sometimes it's not just logic. There's a strategy behind it. Tell us about that.
Tiffany, I could not agree with you more with what you just said, because when I start talking to the buyer, I'm like, don't do anything. Let me look at it with you. And I'm going to help you, because it isn't like you might think just pay off a credit card. That would make logical sense. And you'd think that that would raise the credit score. Well, sometimes that's not the case. It can be paying down a specific amount. And I have access to credit simulators, different ones that I can do, specifically targeting how high I can get that credit score. And so that's why I don't want anybody to do anything, but we absolutely together can work together to get the credit score where it needs to be.
So if there's someone listening right now and they're wondering, well, I have a 590 or a 620, I'm probably not ready. I would differ with them. I would say you need to talk to Michelle. You need to talk to a lender so that they can help guide you as to how to get where you want to be instead of going at it alone. Do you agree with that, Michelle?
I mean, I completely agree with it. And I could give you example after an example, but I had an application today and the credit score was below the amount that was the allowable to get a loan approved. And I ordered one of the simulators and easily could get the score up about 40 points. So problem solved. So I definitely feel that this is something you don't want to avoid because you think you may have bad news. You want to talk to me and we can, strategize together to get you ready to buy a home.
Okay.
With Tiffany.
So as we talk about credit score, the next thing comes up is how much do I qualify for? And oftentimes I find you might qualify for one amount, but the payment you want might be another. So let's hear what Michelle has to say about qualifying for a mortgage and what that looks like.
Okay, so there are factors. One of them that's not talked about a lot is employment. For first-time home buyers just getting out of college, or you're going to be graduating in May or what have you, that the timeline is a 2-year employment history. But when you've been in college, we can use your college transcripts. But employment is important. What type of employment it is, full-time or part-time. Income is calculated based on the type of job and the type of pay structure, such as a salary or hourly, commissions, self-employed. All of those loans are calculated different on income, and it is very important that we talk through that together so that we prepare. We already talked about credit history, and the last thing is going to be the amount of money that you have. And in some cases, you don't have to have any money down. There is down payment assistance programs. So don't let that be prohibitive. We want to have open dialogue and just see how we can get the buyer to be ready to purchase.
I think that makes a lot of sense. I often have people say, well, I just switched jobs, or I have something going on with my job. And oftentimes when I talk to Michelle, she says, well, maybe we only need 30 days worth of pay stubs. There are lots of different criteria out there. So depending on whether you're a W-2 employee or a 1099, which means that you take care of your own taxes. Michelle, tell me a little bit about if you have a first-time home buyer and they own their own business or are self-employed.
Okay, so for self-employed income, you do have to have a 2-year history. It's considered variable income until there is a 2-year history showing that, this is what the income is going to be, since it's not a salary. And so we are required to then get 2 years worth of tax returns, and we use the adjusted gross income. That's your income that you're paying yourself less whatever you're writing off.
I think that's the most important component, is what you're not writing off. As a self-employed person, and knowing that a lot of young people are entrepreneurs and a lot of people who are looking for first-time homes are entrepreneurs, it's important that those tax returns, if you're writing off a lot, it's not your top number, it's your bottom number. So if you're looking for a strategy to make sure you can buy this year or next year or the following year, talk to Michelle about what that needs to look like so that you can plan it out and you can be that first-time home buyer you want to be. Because the last thing we want to do is for you decide not to build wealth as a homeowner, or to look at it and not realize what you need to do to get there. We want to help you and guide you and give you that expert advice that we have gathered over the years so that you're successful in the endeavors you want to take on.
Absolutely.
Debt to income ratio, this is the average back end. All loans, it's about 35%, and you're probably going, DTI? What is DTI? Let's just pop over to the next slide so that you can really see what it is. Debt to income ratio. And I all the time am asking Michelle, what do you think, how does this actually work? So when I saw this slide, I loved it. And so I said, let's talk about it. Monthly income. Tell me what goes into the monthly income, Michelle, that bottom number.
That, like we were talking about, I was describing the different types of income. It is the gross income, not the net, after taxes and insurance and all of that's taken out. It is your gross number, and then again, it's going to be calculated based on whether or not it's salary. If it's not salary, I'm definitely going to upfront take income documents and look at them and make sure that what you put in an application as a buyer is what the underwriter is going to use to approve a loan. Super important, especially when they're ready to make an offer.
Okay, and if you're self-employed, that bottom line number, how do you calculate it?
Okay, so that's, again, the adjusted gross. So you're going to have what you made, and then you're going to have your write-offs of everything that you wrote off, and then there is an adjusted gross. That's what you're paying your taxes on. Well, that's what we have to use as your income. It is the income that's left over after you've paid all of your expenses. So to your point, Tiffany, which you just said a little while ago, you know, balancing that, watching what the write-offs are, watching what the, you know, the whole picture on self-employed is really important.
Okay, and now we go to the top number, monthly debt. Tell me what goes into that number. A lot of us have credit cards. A lot of us have student loans. A lot of us have cell phone bills, you name it. Tell me what goes into that monthly debt number.
Okay, so the monthly debt that's used to qualify are loans, credit cards, like you just said, car loans, student loans. You know, if there's an unsecured loan, it is not your insurance, car insurance. It's not any of those utility bills, anything like that. So it's simply just and it would be the minimum credit card payment. Student loans, that's something also a lot of students have their student loan deferred. So they think, okay, I have no debt there, but we still have to calculate a debt. So that's really important for me to talk to the buyer about, because there's different ways for us to set that up so that we can maximize the qualifying amount by making that payment as low as possible. And then lastly, we when you add all the monthly debt that you have, we add in the new house payment, because that's going to be a debt that you're going to carry moving forward. And we're just dividing those numbers added up by the gross monthly income, and that gives us the debt to income ratio.
Okay, I think that's pretty straightforward. Thank you.
Mm-hmm.
So the next thing we come to is down payment. Oftentimes, When I talk to a first-time home buyer, someone has told them they need to put 20% down. And when we look at that, there's so many options out there. We've listed a few here, but there are a lot more. Michelle, can you tell us a little bit about these and maybe even some of the down payment assistance programs?
Absolutely. Tiffany, I was just thinking when you said that, I rarely see anybody put 20% down, believe it or not, whether they're a first-time home buyer or it's, several homes in that they've purchased. Interest rates are so low, people are actually trying to borrow, maximize on their mortgage and keep their cash. But on the different loan programs, we have FHA. FHA's been around forever. This loan program was really designed for the first-time home buyer, allowing for higher debt-to-income ratios, allowing for a lower down payment. The guidelines are a little bit easier, and it's there just so that home ownership is possible. There's VA. If you've been in the military, then you can do no money down with VA. And actually on VA loans, we don't charge any bank fees to, really take care of our veterans. And then there's new conventional loans that have 3% down for first-time home buyers, Home Possible and Home Ready. And those also allow for a lower credit score. They allow for lower private mortgage insurance. So there's a lot of benefits to that program. And last, you mentioned down payment assistance. We offer that. And down payment assistance, there's different programs. So it's very important that I talk to the buyer, ascertain, their situation and what we're trying to achieve. But you can get as much as 5% of the sales price as down payment assistance. So there's opportunities out there regardless of how much money you have saved right now.
And, the other piece that we've talked about is gifting.
Oh, yeah, absolutely. Gifting, and that's a big one. That's definitely available from a family member. It could be a grandparent, your parents, your siblings, an aunt and uncle. So you are allowed to get a gift on any of these loan programs for 100% of the cash you need to bring to close or just a portion of it. So that's a real benefit with the first-time home buyer.
Okay, and then in our area, we do have certain areas within our Charlotte region that qualify for USDA, which is the U.S. Department of Agriculture 100% financing program. If the area qualifies, you guys do those as well, right?
Absolutely, we do. Yes, and just as you said, the area has to qualify as rural. But yes, we do those.
Okay. Those are the down payments. So as we move through the process, when you're buying a house, working with Michelle, working with a lender up front, getting that pre-approval, going through the process of making sure you fill out an application. Oftentimes I find people are a little hesitant to fill out the application. The reason Michelle and any lender needs that application is because they need to see it in writing so that we're making sure we're protecting you. In North Carolina, you have due diligence and a due diligence fee, which is given to the seller up front to take their house off the market so that you can inspect it and go through the process. Well, if we find out we have a problem with your financing during the due diligence period, you don't get the due diligence money back, you don't get the appraisal money back, and you don't get your inspection money back for the inspection. And that's why we're being so diligent and so focused on getting you through that application and getting you as far along in the pre-approval process as we can before we go out and look at homes. And that's for two reasons: to protect you and to protect your money, but also to make sure we know what price point makes sense. We've talked about credit. We've talked about debt to income ratio. We've talked about all the different things that go into a mortgage, and there are plenty more that we haven't talked about, but those are the basics. And have a pre-approval letter is what a seller is looking for today. If you don't have a pre-approval letter, I'm really not sure I've seen a seller out there that would even consider your offer.
Yeah.
So that is why, as a home buyer, when you say, I'll get that pre-approval later, as an agent myself or any other agent you go to, is going to continue to ask you about that pre-approval because it's so important. And you can't have a pre-approval without filling out an application and speaking to Michelle or a lender. And when we talk about that pre-approval, it also gives us an idea of how much money you want to spend, because you'll have an idea of what that payment looks like for what you're qualified for. Michelle, how many times have you pre-approved someone and said, hey, you could borrow $300,000, but when you tell them what the monthly payment would be, which is often different than the mortgage calculator, they gasp and say, well, that's not what I wanted to pay. That's not what my payment is now. I want to live. And so what do you find?
I have that conversation frequently. Again, because interest rates are so low, the buying power is much more. So people can afford, per the banks or mortgage companies' debt to income ratio, but that's not something that they feel comfortable with.
Right.
Tiffany, I wanted to say something that just expand on what you just said. You know, with the pre-approval letter,
Mm-hmm.
I experience this frequently where I will talk to a customer. They're thinking about buying. It's really important to them, but they haven't decided to do it yet. And they resist doing that application. And then the next thing you know is they're on your live feed. They're looking at homes. They're getting excited about it. And then all of a sudden they're like, oh, this is the one. I want to go see it. Well, but they haven't done the application. So us getting that pre-approval letter that's required, and the sellers aren't going to consider it without it, you're behind the 8 ball, right? And I can tell you story after story, but I literally had that happen today because there was sellers offering homes highest and best. And what do? You don't have an application. So I really do encourage people to just get that knocked out right away.
That is the most interesting part of the process, is getting you pre-approved. And so certainly get out there and get yourself pre-approved, because it puts you in that strong position and it makes you ready. When we look at your buying power, the process, that homework of getting pre-approved and knowing what you want, not just what you can do, but what you would like to do, is going to help our strategy for home buying so much. And Michelle is an expert. She's been lending for over 20 years. I think she's pretty much seen it all. I've actually seen her handhold one of my clients years ago on the phone with the IRS for probably 15 hours total.
Yeah.
He ended up getting his mortgage, but had he not been with Michelle and had she not held his hand in conversation with IRS officers, he probably wouldn't have gotten the loan. I've seen scenarios where we had lots of things to clean up on the credit report, and it took a little bit of time. But if you're willing to put in the work, Michelle's willing to put in the work, I'm willing to put in the work, it's that team effort, that collaboration that really makes the difference. And that's why we wanted to have a home buying workshop tonight and really talk to you about what goes into it, because how does the mortgage process work? Michelle and I are going to really kind of walk you through that process. We're going to do it brief because there's a lot of things where A could happen or B could happen. But I'm going to have Michelle kind of walk you through from pre-qualification around to the closing. So that you just get a feel for what's going to happen once you decide to take that step.
Okay, well, as we have said over and over, get pre-qualified first. So the first thing is to get a really good loan application where you're telling me everything. Because I'm the person, I'm working on your side to help you get this loan, and information always ends up popping up at the wrong time at the end. So having a really good application.
I have to second that, Michelle. If you don't tell us what's going on in your world, the real world, we can't help you. Right. We can't save your money. We need to know those things that you don't want anyone to know. We're not going to share them. We're responsible for being quiet and keeping your secrets and your information within house. We're not going to be sharing it out there with anyone else, not even anyone in your family, if they don't need to know and you haven't already told them. If we can find a solution for you, we will, but we can't help you if you don't let us help you. So remember that collaborative team when it comes to that pre-qual. Michelle, sorry I interrupted you.
No, that's perfect. And the other thing while you were talking, I just popped in my head, Tiffany, is, and this has been my experience with you over all these years, is together, we're really problem solvers. We are here to be tenacious and work out any detail, but we have to know what we can't fix what we don't know. So with that, after we've gotten the buyer pre-qualified, then it's time to go start the fun part, looking for the home and putting in an offer. And from there, then we actually start the mortgage process.
And
okay.
As you start that mortgage process, it mentions getting the home inspected. Mm-hmm. You're always going to want to have a home inspected by a licensed home inspector. It's your biggest investment. And so you want to make sure you have someone looking at it from the foundation to the roof, making sure that if there is a problem, we can address it during the due diligence period or during the repair procedure of this process. And so as Michelle is going through her processing, I'm going there. Your start with a loan disclosure, right, Michelle?
Absolutely. We disclose the loan. We've talked about the interest rate, the payment, the closing costs, and then we actually disclose that information, which is our commitment or our contract to the buyer, that it's full disclosure, it's transparent. We're not going to be changing things as we're doing the loan or before closing. We are disclosing all that information up front. We're collecting the important documents that are more than just income documents. We get driver's license, asset statements, these types of things that the underwriter is going to have to go through to approve the loan. So we do need their participation.
And with those documents, we also hand over the offer to purchase contract to you, which is the buyer's agreement with the seller to purchase the property.
Right.
And in order to put that together, we need an agreement between a realtor's firm and the buyer so that we can assist and guide you through the process. So there's several different forms and documents that you need along the way, but the one that we hand off to Michelle is that offer to purchase contract that gives her the terms so that she can get that ball rolling for you.
Exactly. And you mentioned the due diligence a couple times, and you and I both know we're extremely mindful of that and making sure we don't ever risk the buyer's money. We're going to do everything we are supposed to do to make sure it's successful. And so that comes with you just said, and Tiffany, I think this really makes a difference. Buyers need you, a really good realtor, because getting a good inspector to inspect the home, getting that home appraised, we're going to order it, but you and I are involved all the way through, communicating with one another to make sure we hit every date that we're supposed to.
And that due diligence period is probably one of the biggest dates out there. And that is the date, at least in North Carolina, and depending on the contract that you do in South Carolina, that the buyer has to walk away, and you would lose your due diligence fee, your appraisal fee, and any inspections you've done. Right. But if you're not happy with the house, or you're not satisfied with the process, or we have a hiccup in any way, that's our date to disconnect for you. And so Michelle and I are completely aligned to make sure we both know that date at 5 o'clock. We have to have paperwork if we're going to terminate something, because otherwise earnest money deposit is another piece that you have deposited with either an attorney or a realtor's firm. And that money then becomes open and available to the seller should you back away and you have a problem. So the reason why we're pushing you so hard in the beginning is to make sure we get everything done, is because we want to hit that deadline and for you to have a sigh of relief and just kind of sail into the closing while Michelle is running hard in the background. Tell us a little bit about what you're doing as we're doing that.
Okay, perfect. Well, like I said, we're going to order the appraisal, make sure the home comes in at value. We're going to ask for those documents and get the loan processed, which is doing all third-party verifications of employment, income, assets. And then we also are going to be ordering title, making sure all that's done correctly. And we get the loan as fast as we possibly can into underwriting. That is my goal the moment we get an offer. I want, before that due diligence period comes due, for the loan to have been formally underwritten by an underwriter and we know we're going to close. So we've just checked off these boxes, the inspection, the appraisal, and now we have a loan approval. And therefore then the buyer knows, yay, yeah, then we know that they can go forward and that we still have more work to do. It's not done, but we have covered all the main points to make sure that we're going to make it to closing.
And when we are headed to closing, one of the things we're doing is checking if we did any type of due diligence and repair requests, that repair request is being handled properly by the seller. We're getting receipts and documentation to know what was done. We might be having a re-inspection. And as Michelle is moving forward, there's something called a closing disclosure. She's sharing that with you at least 3 business days prior to closing. And at that point, she also is going to be sharing documents and information with the attorney, because in North Carolina and South Carolina, you've got to close with an attorney. And that attorney and the lender and Michelle go back and forth to make sure everything adds up and everyone aligns and balances. Yes. And once that happens, we have a closing. Right. And the lender's package, and your hand gets tired.
Right.
We have a scheduled time at attorney's office to go and sign the paperwork. Before we get to the attorney's office, we do a walkthrough on the home to make sure it's substantially the same condition, the repairs are done, and that the seller has moved out and the house looks good. Once we do that, we're headed to the closing table. And Michelle has those documents at the attorney's office waiting for us to sign. And the attorney has a few other documents to sign. Once we sign those papers, in South Carolina, you typically get the keys if the funds are there. And let's talk about funds. The lender's funds have to arrive, and then they have to be approved, typically. Then you have to deliver your funds. In today's society, it's unfortunate, but we need to be very careful when it comes to wire fraud. So we're going to be stopping you along the way saying, did you call the attorney to verify that the wiring instructions are correct if you're bringing money to closing? So we're talking through that. We're making sure that you understand the closing disclosure. We're going piece by piece to make sure that you know where your money's applied and what it's going to and how it works, because we're also setting up things for you in the future for your escrow account for when you do have a mortgage and you're building your equity, so you can pay your taxes and insurance in the future. But we're all working hand in hand collaboratively to make sure you get to that point. And in North Carolina, we've got to wait till it actually records at the courthouse. A lot of the courthouses are electronic these days, but it's not typically when you're sitting at that table. So you can't expect to get the keys when you sign. You got to give it a little bit of time. It's typically same day. We always prefer to do a morning closing if at all possible. But that process, when we hand you the keys and you start smiling, I always say, you're going to forget the labor that you went through to get to today in about 6 months, when you're smiling and enjoying your house, when you're cooking a meal, when you're relaxing on your couch, when you're taking a bath in your gorgeous new bathtub, when you're playing in the backyard. That's when you're going to feel it, that first time home ownership. Michelle, do you have anything to add?
No, just when you were just saying that, the only thing I want to add is your first home is exciting. It's a little bit scary. I mean, all of us kind of shy away or are worried about the unknown, and having the experts, Tiffany, yourself as the realtor, the attorney is reading all the documents before they sign, and having myself and the lender that is just watching the whole way. That's the exciting part, that you have the assurance as a buyer that you're protected, and you're never ever going to forget your first house and the feeling it is when you put those keys through the door. It's really exciting, and I love working with first-time home buyers just because it is exciting.
I love it too. The first time home buying experience and just guiding someone through to getting into their home. There's no better feeling. So thank you for taking time today to talk through the home buying process for first time home buyers, Michelle. You have always been an asset and a resource. We have got your information on home buying and selling down below. So if you want a first time home buyer guide from Michelle, go to the link below, connect with her. If you decided you want to apply for a loan, you can apply for a loan there. If you have questions regarding the process and you want to talk to me, you can reach out to me as well. I'm Tiffany Johannes with RE/MAX Executive and Charlotte Home Experts. We really appreciate you taking the time today. This first time home buyer piece is a great guide and a great resource along with Michelle's help. Michelle, thank you so much for taking time to join us tonight. And I want to say, I really enjoy working with you, and that professionalism that you have along the way and that diligence for the client is always impeccable.
Well, I have same feeling about you, because working with a professional and you're on our team, it really makes a difference, Tiffany. So thank you for all that you do, and thanks for inviting me tonight. I really appreciate it.
Well, you're welcome. And I was just going to look to see if I saw any questions over here in the chat. I don't think I see any right now. So with that said, I'm Tiffany Johannes with RE/MAX Executive and Charlotte Home Experts. Thank you, Michelle Dubois with Prime Lending, Senior Loan Officer, for joining us tonight. If you have any questions, don't hesitate to reach out to either one of us. Until next time, I'll be looking for any questions you have to feature on one of our next workshops. Thank you.
Thank you.